Hey, welcome everybody to the 40 Finance channel. Wasn't going to do a video today, but after this PayPal news, then I just thought I'd jump on and just give you my take for whatever it's worth. PayPal is my largest stock holding, so I've spent some time reading about this all morning and kind of thinking about what is the bull and bear case for an acquisition like this. So let's just jump in and I'll share my take. If you didn't know, then you should probably know now. Pinterest stock jumps after PayPal said to explore acquisition. See the headline there. They're considering acquiring the social media company. So keep that in mind. This is merely a rumor at this point. The San Jose payments firm recently contacted Pinterest about a potential deal. And the best we know right now is the transaction could value the company at $45 billion, including the value of its untraded B shares, Bloomberg said. PayPal would finance the deal mostly through stock, Reuters reported. Okay, so what I've read, and again, you're digging through rumors on the internet here, is that somewhere it would put the Pinterest value at about $70 a share is about what they would pay. Obviously, that is more than Pinterest is worth today. I think the stock, got it right here, we're at about 61. Let me fix this screen for you. Pinterest is at 61 as of today. So let's just talk about the bull and bear cases from my situation, or from my standpoint as a shareholder. Number one is the rumors are the rumors, and nothing is real, and neither PayPal nor Pinterest has come out and said that these rumors are true. Now, a rumor like this is probably likely true that the two people are talking, right? That the two firms are talking. Now, whether or not they make it down the road to a deal, and then further whether or not that deal is actually approved, that's a long way away. I mean, that could be a couple months away at least. And we have seen some regulation come in with fintech companies before. I don't think that this one would really face the same amount of regulation or perhaps blockage as we saw with like Visa and Plaid. But there's a lot of hoops to jump through on this. All right, so what's my take? And I kind of wrote out, I know you can't read my notes here, but I wrote out a bullish and bearish segment to each side. And on the bullish side for PayPal, of all the companies they could buy in the social media space, it is nice that Pinterest is a profitable company, right? So Facebook's not for sale, obviously. Instagram, all those other YouTube and whatnot that are profitable, those are not for sale. Okay, so you would probably be down. If you wanted to buy social media, you're probably looking at some combination of TikTok and Snap, stuff like that, maybe Twitter, and Twitter's profitable too. Pinterest actually has an EPS and it's growing. So it's not growing leaps and bounds. Last year was 42 cents a share. This year they're expected to come in over $1, and next year $1.39. And on the revenue side, it's growing well, right? Plus 54% projected this year and another 30% next year. So Pinterest is a stock that basically ran ahead of itself, in my opinion, like a lot of the market has here in 2021. And it kind of came back down to earth because there were some concerns about their user growth, which I think is always going to be a concern for them. Unless international really takes off, I think their USA user growth is going to always be sort of up and down. They're too mature to wake up one day and add 60 bazillion users. It just doesn't happen that way in an established country, and we're seeing that really with Facebook as well. Now, so profitable company, that's a bonus. Instead of buying a sinking ship, they're buying somebody who's actually making money. Let me just show you this real quick, and then I'll move on. Forward PE on this one, if you're curious, 40.82 at about $61. So, not horrible valuation. 2.25 billion. Let me scroll up. 2.25 billion revenue trailing 12 months. Total cash on hand in the most recent quarter was another 2 billion. Debt in the most recent quarter, 121 million. So this is not a upside down company. This is not a property flip by any stretch of the imagination. So that is a positive. The second thing that I'm going to say is a positive for PayPal is just what Pinterest is, right? So sort of a discovery engine. I would say that out of all the apps, social media applications that are out there, Pinterest has probably the most commercial intent, right? So if you're talking about even looking for, I've used it for paint colors before. In fact, I just painted a shed I got, and I just went to Pinterest and looked at sheds just to kind of get a feel for what colors were out there and sort of how they looked in the yard. And that influenced my painting purchase decision. Now, it didn't help the person who made the pin, but you could argue certainly that I was there with commercial intent. Then you start to think about things like fashion, crafts, holiday decorations, whatever. They've had very strong ties to Etsy, Pinterest and Etsy, advertising engine, over to Etsy sales. So there's a lot of commercial intent in there. And that's where PayPal, I think, could have a plan. I don't know what that plan is, and I'm not going to pretend to. But I am going to speculate that with having Pinterest social media, you do have a nice base of what I would say is active consumers. Now, how can you shift them over to a PayPal win? That's not as easy for me to imagine, but let's face it, I'm not a social media developer, right? And in that world is done by pros, and I'm sure PayPal has access to those pros. Next, you have the fact that PayPal has been experimenting with their shop feature, which is basically people who pin stuff that you can buy directly through the application or directly through to your Shopify store or whatever it is. So there is some opportunity in there for PayPal to further not just PayPal, but Venmo, right? They have their own version of buy now, pay later that they could integrate. So I can see it. I can see that. Next on the bull case, I'm just making sure I read through this all right. You'll see this a lot, the super app, right? So the concept of a fintech super app. Some people I've read online are making the argument that this could be that shopping connection. I don't know if PayPal needs that because they have such a strong merchant base. So if PayPal wanted to push shopping, let's just say to Walmart or something, they could do that probably already, but the Pinterest inspiration model might further that development down the road. And lastly, on the bull side, I will say PayPal's last acquisition in 2019 was the Honey app, which basically helps you with coupon codes and promotions and such. And they bought it, funny enough, mostly for the user base. Okay, you can go back and read on the earnings report, but they bought it for a user base. And what they found out was those users translated over very, very well. When Honey was first acquired by PayPal, I was a little bit skeptical on it that those users would transfer. But because it was a commercial application, right? It's people looking to save money on their purchases because that's what Honey represented, the move over to PayPal was seemed to be relatively smooth. And that Honey with promo codes and coupon codes certainly accentuates things like the PayPal app, eventually into Venmo, etc., etc. The final thing I'll put here on the bull case that I think I alluded to earlier about regulation. This is one thing that they could acquire, Pinterest, that doesn't do a lot with investing and banking and money. That's not going to draw a ton of attention from people. It's really not. So whether or not folks think it's good or bad, this is an acquisition that can happen without a ton of scrutiny. Now, it'll have a ton of opinion on whether or not it's good or bad for the company, but it's not going to get called out by the Trade Commission, right, or anything like that. So those are all the positives. Let's get into some of the negatives. I'm going to switch over and show you PayPal stock. So we're down about 5% today. I can't remember how yesterday ended. But, you know, from a valuation perspective, let me just say that right now, this is an annual look, and you just go forward PE. You can also do price to sales here. You know, PayPal is running just as far ahead of itself as the rest of the market is, okay? Your 45 forward PE today compared to 2018, 2019 when you're in the 30s, it's definitely higher. Price to sales, if you want to do that, you know, it's almost double. So low interest rates, right? High growth prospects. Of course, there's going to be a premium on the stock. This 5% off that we're seeing today at $245, you know, if you didn't have PayPal holding, maybe it starts to get you interested. I don't think that this price is like throw everything you've got at it at all. I'm in around 190, 195, I can't remember. And I'm just holding. It's my number one position. I'm not adding more. So before I get into the bear cases, I wanted to tell you that I am not selling PayPal and I am not buying PayPal at this price. Mostly because it's my top holding, and where my cost basis is, I'm still flying high. In fact, if the stock dropped to 225, I'd still be far in the green, and maybe then I'd add a few shares, but this particular situation is not buying or selling opportunity for me. Okay, so at the bearish side, we talked about the fact that Pinterest is at 60, if it is at $70, okay? If we're gonna go to $70, and let me show you something here. You're buying a stock, you know, at a premium would just be my basic analysis. And I'm gonna try to show you our famous Seeking Alpha earnings estimate, graph chart, whatever. And here, I guess it's a table, right? December 2021, from an EPS standpoint, if they hit $1.06, they're up 153%. That's a forward PE of 60, which isn't bad, certainly compared to some other stuff that's out there. And then on the 22nd, if we get into next fiscal year, which, oh, by the way, from a forward standpoint is basically 2 months away, right? Your forward PE will be calculated off this estimate. You really could be doing it now if you're a savvy investor. Your forward PE there is 45. So is it cheap? I wouldn't say cheap, because this is the numbers that are represented at $61. Remember, they're supposedly paying $70. And if you get price to sales going, you're not under what I would say a deal, which is under double digits. Okay, so you're at 1174. So that would be one bear case. I would say that buying Pinterest at $70 a share without me ever doing a major business acquisition like this is not, it's not the best price I think that you could get it at. But if it is an all stock deal and they're giving PayPal's overvalued stock for a Pinterest overvalued stock, well, hey, then now you're talking, okay? You're trading something that you have that's probably overvalued right now for something they have. Which one's overvalued more? That's a good question. I think you could flip a coin. All right. Bearish thought number 2. Memories of eBay, right? So PayPal's finally just about closed that chapter. There was tons and tons of negativity in PayPal stock because it's like, dude, if they lose eBay, they're crashing down. They don't know what they're doing. You know, eBay's switching to their own payment platform. Needless to say, as I've promoted on this channel several times, that was a non-factor. And I think, we could see that as a non-factor for a long time. I buy a handful of things off eBay occasionally, mostly collectibles, and you can still pay with PayPal. Like, I don't know, it's not sitting there right in front of your face, but it was still on there. And if you go through, PayPal's earnings reports, you will see that they put in-depth metrics on the decline of the eBay business and what that means for their forward business. And it's really at the point where, I don't want to say it's a nothing burger, but they have bigger, better things going on. However, now you're going to get wrapped into Pinterest. Pinterest, oddly, is facing the same concern that eBay was facing not too long ago, which is declining user base, perhaps some disinterest in the platform. We don't know all that yet. It's only been one negative quarter that's coming off of COVID, and it's only been user metrics. It hasn't been profits, right? But are you buying a declining platform, and then are you going to get sucked into that thing? I don't know, but it's a fair question, and that's on the bear side. Also, so I said declining user metrics, okay. On the debt side, so I'm not going to pretend to know all this. If they use stock, that's going to be fantastic. I can't imagine, though, in PayPal's world, this doesn't do something to their debt holdings, just the whole complete execution of the plan. And granted, you will earn sales and profits, but I can't imagine that year 1 or 2 is going to come out profitable just because of the acquisition costs, the brokerages, brokerages meaning the people who help facilitate the deal. And here's what we got with PayPal. We have $23 billion in revenue trailing 12 months, $12 billion in cash most recent quarter, total debt, $9.69 billion most recent quarter. That's not horrible, right? It's 50% of your 1-year revenue, but it is close to your total cash position by, short by $3 billion. So PayPal for me is in a good place, but I really don't want to see them turn into a debt engine that's acquiring everything. I already have one of those with DraftKings. So I hope that the stock deal can get its money back within 24 months is kind of what I'd be looking for. We don't know that until more details are released. I can tell you with Honey, the acquisition costs were relatively high, and if I remember correctly from an old earnings report, though, it was somewhere in the neighborhood of a 2-year span, or maybe, that can't be right because it was 2019, maybe it was only a 1-year span that the ROI started to trump the acquisition, right? So they actually reached flat on it, and then ideally those users that are imported will continue to chime along with the company, right? And each user makes more money for the company. All right, so that's my big bull versus bear. Ultimately, where I'm at right now, PayPal, the stock was running hot anyway. It was good news for me, but I don't, sit on this channel and tell you, look at this momentum. It's going through the roof. It'll never stop. That's not my style, and you guys know that. I think it was running slightly overvalued. I think that this current pullback is nothing to be worried about. I think that Pinterest, purchasing Pinterest, could be a very sneaky zig move. And I say that because while others are zigging, right? They're buying up BNPLs, which PayPal already has. They're doing this and that in the finance space, cryptocurrency, blah, 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 blah. PayPal comes out and zags. They're like, Pinterest, we'll take that. Okay? Interesting move. Hard to say it's stupid when we, A, don't know it's true, and B, it's sitting right there. It's an interesting play. It has shopping commercial intent. The jury's out. I can understand why some people don't like it. I'm holding. I will continue to hold. If they announce the deal tomorrow at $70, the stock went down to $200, I would still hold, okay? Because I think that their track record proves itself over time with PayPal. And I think that this fintech super app space, it's going to take more shiny objects than just good credit card rates, okay? Online savings accounts and cryptocurrency exchanges. That to me is not a fintech super app that sustains itself in the same way that people think it does, right? When we want it to be a super app, we want it to be everything money, and guess what? You shop with money. So let's see what happens on it. All right, that's the soliloquy. I'm going to get into some of the questions here. I am the only one, Jeff. Kevin Koshi, do you like Sleep Number stock? I don't know about that one right now, and I'm going to try to stick to PayPal questions. Good morning, Kevin Hawthorne. John Spencer, I'm about 20% underwater with pins. Would like PayPal to bail me out. Okay, so if you're 20% under, you're probably, what, $72 ish? And you never know. It looked like pins started to go back down, not by a ton, but minus 3%. They popped yesterday. It's going to take a while for this news to get going. I hope they pull you out too. Derek Ridlin loves Sleep Number stock. Those two are talking about it. HPQ is Derek's big winner today. Nobody here for the PayPal news. Let me see what HPQ, oh, HP. Wow, congratulations on that, plus 6%. I also think that they increased their dividend, if I watched correctly. So good job to those that were in HP. Mark Zuckerberg's buying the dip, and I don't, you know, PayPal long-term, you guys know I love it. I don't want to sound like a fanboy, and I am a fanboy of it, but I don't want this to be the pump and dump channel, so I want to be careful, but I like the move for the long time. John Spencer, PayPal down about 8% since this leak. The market isn't not liking it. The more I think of this idea, the more it makes sense. I'm with you. Think about shopping, okay? Don't think about Pinterest as a social. Don't think about it as a Twitter and an Instagram. Think about it for shopping. And frankly, if you want to make money in social media, if I was running a platform, Pinterest would probably be the closest thing, because I don't want people talking about Donald Trump and you know, funny videos of guys jumping off the roof and lighting themselves on fire. Like that's great. That's eyeballs. That's everything. But I'm more of a business person. I want people to talk about spending money or inspiring themselves to spend money, and then work with partners to bring those two worlds together. So I'll give Pinterest that, all right? And that's where I think it can make sense. Zuckerberg, PayPal has almost leaked enough market cap to halfway cover it. Fair. Intel, I'll tell you what, Kevin and Derek Ridlin are forming a friendship here. Intel is my covered call stock, my biggest position because I have a small amount. Nice. PayPal plus Pinterest both are losers. Oh dear. So we got some hate, and then that's fair. Not a problem with that. Compared to MasterCard and Visa, PayPal is cheap. I would agree with that. I think, Visa is my second one, so I'm not going to trash Visa. What I will say about Visa as a stockholder is that, gee whiz, is this taking a lot longer than I certainly imagined coming out of COVID. And the reality of it all that I've mentioned many, many, many times is that holy shnikes, business travel was a big part of Visa, not to mention international travel with currency conversion. That's a killer. Now, Visa's doing good, but taking that icing off the cake, those two categories, we're looking at another year, I think, and before they start making positive growth. And that assumes no setbacks in the world of viruses. And irresponsible to buy pins at 70. I'd be real upset if I was PayPal. This is Derek. Aren't you supposed to acquire companies when they are cheap? I can see that. That's fair. And like I said, I don't think $70 is a sale at all or cheap. My only pushback on that comment, which I think is a very fair comment, is that if they're trading their own overvalued stock for Pinterest overvalued stock, maybe it's a wash. I'm not smart enough to do that calculation, but think about that for a second. There could be something there. Zuckerberg, it depends on how valuable it could be to PayPal over the long run. This is true. In long term, both businesses are going to fail. Okay, so Mr. Mugai is not a fan of either, and that's okay. Do you have any buy-in point for Coin or SoFi? SoFi we probably missed, right? It looks like it bounced. You're going to need a negative headline there. It was actually something I was starting to become interested in because of my love for fintech. And then, we had the meltdown, slow trickle out last, looks like 2 weeks ago. And then the market bounced back. I wish I would have bought some of SoFi. My calling card on SoFi, besides the fact that I'm familiar with it and I've used it, is I just can't believe that Morningstar gave it a fair value of 17. And that's a compliment. Because Morningstar just doesn't screw around with these companies that have, these sort of plays that are, not necessarily profitable yet. So SoFi, I don't know. What if it went to 15 again? Then I might have to just buy some. I might just have to. As always with me, I am going to lean towards half empty cautiously to make sure that I'm not buying something that's going to float down, but it certainly looks like, 14. I don't know if we'll see that again. We're going to need a major market event to do that. As far as Coinbase goes, I am still positioning my crypto investment, and I'm still thinking a lot about which way I'm going to go with it. Coinbase is a candidate. I worry about them, as I've said here a lot of times, but their brand is the number one brand, in my opinion, without looking at any research. So put it this way, if I know Coinbase and I know that it's a trusted platform and I recognize CEO and stuff, okay, so that's a big brand, because I don't know, jimmyscryptohouse.com or wherever other people are getting it, right? I know Coinbase, so I like that brand equity, and I'd have to figure to some extent that, hey, the people are, started here and their stuff grew so much, it's got to be good for the long term. But my entire crypto investment will be, when I get it organized and get where I'm going to get with it, because more than half of it is cash right now, then I'll let you know what I decided. But it's not bad. There's another one though. I mean, what, 250? What were we at? October 13th, 250. October 4th. What else we have this year? 227 in September. Let's go to July. 225. I mean, it's all Bitcoin value, right? So, you know, I'm not the expert on crypto, but if you woke up tomorrow and the news said that Bitcoin price drops in half to 32 or wherever it's at today, whatever half of that is, I mean, would you be surprised? I would not even be surprised. Like, it would not shock me, and I'm not saying that because I don't believe in it. I just don't know what the foundational elements are, besides momentum and whatnot. If somebody, let's just say somebody holds a ton of it, right, early investor, whatever, and they sold 600 Bitcoin, is that enough to shake that market up? I have no idea. I have no idea, but I'm telling you that I would read the headline that Bitcoin drops to $32,000 and my pulse wouldn't even change. And I'd be like, okay, that's interesting. Let's see what we got. So that's my take. I would say on the flip side, and in a positive, if Bitcoin goes from here to $85,000 in 30 days, I don't think that would surprise me either. And that's a weird, weird, weird place to be with these investments. Very weird. You just don't see that, and I get why it's drawn so much attention. All right, let me see if there's a couple more questions. What makes it overvalued in a fundamental aspect? Coinbase or PayPal? Montero, just let me know which one you're talking about here. Kazi, is the market slowly creeping back up before a large crash? Many people think so. I would say that this earnings season is very, very important for the stocks that are in your portfolio. Speculation of where your stocks are going to go next year is a variable for everybody. Whether you're Walmart or Coinbase or PayPal, you know, every year is a variable. But I can't think of a bigger variable year in 2020 than 2022 in recent memory, okay? There is no promise of continued growth rates. The catalysts that have pushed many growth thesis are winding down. They're not going away. They're winding down, right? Work at home, as long as the virus stays at bay, everything related to the virus that was a catalyst winds down, all right? Things have changed. Consumer behavior has changed. Will it continue to stay on its current path? Say, one of my stocks, Etsy, okay? Can they keep grinding if consumer behavior goes back to normal, so to speak? So that's it. I mean, if you think the market's going to go down, you are thinking some of those things, right? And I have thought about them. I'm not selling anything unless I have a stock that goes up massively, and then I probably will take profits, but that hasn't been the case. And frankly, the stocks I would sell have sucked all year, and it looks like they'll suck again. Whether that's Rocket, Smile Direct, some I've already sold at a loss. So anyway, my losers, the Loserville is not, the forecast is not sunny for Loserville on those stocks, and it's going to take a little bit of luck. But I guarantee if I wake up and Smile Direct's $15, that is gone. All right. Derek, anyone have an opinion on LRCX? Ignore that if you still, let me see what it is. And then Montero came in about Coinbase. Yeah, I'll get you. Lamb Research. Just reported earnings yesterday. I didn't even look at how it went. Let's see what this guy says. Lower than expected revenues for first quarter of 2022. Let's get to the meat. Just an earnings of $8.36 per share. That beat analysts' expectations of $8.21. Revenue of $4.3 billion, lagged street of $4.32, but was up 34%. So obviously, without me digging in, this is a good report. Gross margin, which is a hot topic in chip stocks, 46% down 50 basis points from the June quarter. Operating margin, 32% down 20 points. So everybody's on those margin things with chip stocks. I don't know enough about Lam stuff, but when I eyeball it, how far did it go down? 2%? It's a nothing. I think if you believe in Lam, you keep believing in Lam. The margin place is a weird one for chips, and I realized I didn't even show you guys. I didn't click over and show you that. Here's right here. $8.36 per share, topping analyst expectations. Revenue of $4.3 billion, lagged the street by 4.32, but up 34%. So whatever, if people are down on that, then, so be it. Okay, Montero, what is overvalued about Coinbase? So it's very, very difficult with Coinbase. You have to pick a side on what you believe in. You have 1246 is this EPS, which is absolutely phenomenal, but the consensus of 17 analysts has that halving next year. So whatever your PE is this year, and it should show up here if they've done it right. So we'll have to go quarterly. All right, so there you go. Trailing PE 29, okay? This is going the wrong way, up to 46. So that's one problem. And here's probably the bigger problem. If this materializes, next year's revenue, minus 9%. So year over year decline in revenue. All right. That's a pain. That can be a painful year even for a good company, because every stupid quarterly report says, hey guys, here's what we did in the first quarter, made a lot of money. Last year we made more, right? So people get upset about that. They are not the only ones that face that conundrum, but I think with Coinbase, you have to just be careful with the projections that are on the table and the argument of the race to zero, where Coinbase could be influenced by other crypto brokerages to lower their fees, which of course would lower their margin and basically the number one selling point they have. All right, so I'm not saying that they suck. I'm just saying, get it as low as you can, because there's not a lot on the current projections that suggest next year is a ballyhoo year. But you could have your own projections, right? You could say, for example, January 1 comes around, Bitcoin goes to $100. If the fee to trade Bitcoin, I do not know this for sure, if there's a percentage-based fee on anything that they're doing, well, that fee just went up miraculously. So you could arguably have half the volume and get just as many fees. So there's a lot of workarounds. You just have to build your own thesis. Montero says, do you own videos not covering stocks and fundamentals? That's kind of what I do, man. It's kind of what I do. Now, this past 12 to 15 months, obviously there's a lot of story stocks that have executed their story in changing conditions. But for as long as I've been in the market, there is a lot of truth to fundamentals. There's a lot of truth that this hasn't been the year for me to preach about that, and that's okay. But you don't have to buy on fundamentals, right? Depending on your style, you don't have to buy on it. But if you do, you can usually calculate what the floor is. And that's the scariest part, is the floor. Because nobody buys a stock and wants to go negative, right? For everything that goes up, there's another one that goes down. So if you use fundamentals for anything, I do encourage you to use it for the floor. Very obvious in this COVID time period that the ceiling of fundamental valuations has been blown away multiple times during COVID, and that's okay. You're talking about hopefully a once-in-a-lifetime event. But use it for your floor if you disagree with it entirely. Kazi, are you buying stock right now or just looking? Zillow was the last thing I bought. I am poking in there here and there. I also picked up Magnite when that was trending down when we had some market softness. So not opposed to buying anything right now, but generally speaking, if you wake up and the first thing you hear on the news is all-time high, I'm probably not buying anything, okay? But I'm not selling anything. So when it's at all-time high, the market or whatever the stock of the day is, it's good news for me too. And I'll just, continue with that appreciation. That's why we all invest. I'm not going to buy on an all-time high day. However, if you see some weakness, and depending on where the stock was valued at currently, I could buy in if it reaches a certain point. It really just depends. We talked about fundamental analysis a little bit ago, and for me, at the beginning of this year, I drifted away slightly from protect against the floor, and I did it with Enphase, and I did it with Unity Software, and I did it with PaySafe. Both of those are back up. PaySafe's still down. I didn't protect against the floor, and I got burned. I could have hung on to them. I booked the losses on purpose so that I could sell some gains, tax reasons, and readjust stuff. So, that's how I go about it. And I realize that that's not the meme stock way. But more and more as we enter this mature market, I will be protecting against the floor because I already have money invested, And if I'm not protecting against the floor, then I'm buying A1 quality stocks that look like, 10 plus years is in the bag for them. So, all right, guys, PayPal, Pinterest, thanks for joining. Appreciate all the support, and we'll see you on the next video.